You are 22 years old. You have $1,140 in a checking account. Both of you. That's where this splits. It's November 2020. Bitcoin is trading at $13,800. You've been reading about it for 6 weeks. You buy $1,200 worth. You write the seed phrase on paper. You put it in a book nobody is ever going to borrow. You don't tell anyone. You close the laptop and go to sleep. Same November, same city. You've heard about Bitcoin. Your coworker Marcus bought Dogecoin and lost $340, and now he won't stop talking about it. You decide you're smarter than Marcus. You'll wait until it makes sense, until the volatility settles. You put the $1,200 into a savings account earning 0.04% APY. It sits there, quiet in a different way. January 2021. Your $1,200 is worth $4,100. By April, $7,600. Then Bitcoin drops 53% in 6 weeks. The position falls to $3,400. You feel it in your chest. Not panic, vertigo. You don't sell. You decided price is weather. You hold through the weather. By December 2021, the position is worth $9,800. You watch Bitcoin go from $13,000 to $69,000 in 13 months from the outside. December 2021. You buy $3,000 worth at $61,000. 2 weeks later, it starts falling. 2022 is brutal. Your $3,000 becomes $900. FTX collapses. The headlines are relentless. You sell at $16,200. You recover $790. You file the $2,210 loss under bad decision and close the folder. The gap at age 24. Path A. Position intact. Average cost basis low. Conviction holding. Path B. Net loss $2,210. No position. Watching from outside again. The difference is not intelligence. It's a decision about what volatility means. Path A decided its weather. Path B decided its verdict. That single difference is about to matter more than either of them knows. Bitcoin recovers through 2023. The ETF is approved in January 2024. The halving hits in April. By November 2024, Bitcoin reaches $93,000. Your position is worth $41,000. You are 26. The $1,200 on that secondhand couch has become $41,000. You don't upgrade your apartment. You reinvest a portion into index funds. You let the Bitcoin sit. You watch the 2024 run from the outside again. You consider buying at $52,000 in February. You wait for a pullback. The pullback doesn't come the way you expect. Bitcoin hits $73,000 by March. You watch, you wait, you do not buy. By end of 2024, your savings account has $6,400, a 401k with $11,200. Functional, not positioned. There is a difference and you feel it without being able to name it. Age 30, the midpoint. Path A, net worth approximately $190,000. Bitcoin position growing, real estate cash flowing, index funds compounding, multiple assets working while you sleep. Path B, net worth approximately $41,000. Single Bitcoin position acquired late, retirement savings locked, no passive income, no assets producing anything without your active labor. The distance between these two people is $149,000. They started with the same $1,140. They heard about Bitcoin the same year. One bought before it was obvious. The other waited for certainty in a market that does not sell certainty. Path A, you've lived through 3 cycles now. You add during bear markets. You trim during euphoria. At 33, your net worth approaches $290,000. You hire a fee-only advisor. She helps you carry the position architecturally instead of emotionally. That shift changes everything. Path B, $200 a month into Bitcoin automatically. You understand dollar cost averaging. You're doing it 4 years after it would have mattered most, but doing it. Net worth at 33, approximately $69,600. A medical bill arrives, $3,800. You don't have it in cash. The building pauses for 4 months. Age 40. Path A. Net worth $1,100,000. Bitcoin position $210,000. Index funds $380,000. Real estate equity $290,000. Monthly passive income approximately $5,500. You left the salaried job at 37, not dramatically. The floor was solid enough that you were choosing from preference, not desperation. Path B. Net worth $118,000. Bitcoin $31,000. 401k $52,000. Savings $11,000. No real estate. No passive income. Salary required. The work was real. The income was real. The life was real. But the system you built at 22 was a waiting system, not a building system. And systems compound. Both kinds compound. The distance between these two people is $982,000. 18 years ago, they both heard about Bitcoin the same year. One bought $1,200 worth before it was obvious, before the ETF, before the institutions, before every signal that made it feel safe. The other waited for safe. Safe kept moving. 18 years later, the price of waiting is documented in the account balances. The market does not wait for you to feel ready. It opens every morning. It prices in what enough people believe about the future. And the people who acted before the belief was consensus are the ones holding what Path A is holding right now. Path A's $1,200 didn't require genius. It required a decision made before the outcome was obvious. That's all it ever requires. That's all it ever was. DeFi 2026, from meme coins to real yield. No fluff, no hype. Just a clear breakdown of how people are actually generating passive income in DeFi right now. How to avoid the traps, how to spot real opportunities, and how to build something that actually lasts. And here's the part most people overlook. You don't just learn this, you can earn from it too. Every time someone buys through your link, you earn 30% commission. So instead of chasing random tokens, you're building a real income stream. And for the first 50 people, there's something extra. One person walks away with a hardware wallet. And if you're serious about protecting your assets, you can grab your own offline wallet through the link below. Because 2026, it's not about meme coins anymore. It's about real yield. Link in the description.